Hi, everybody, and welcome to the third instalment of Wolters Kluwer's webinar series for Making Tax Digital. In this session, we will be running through in detail around the end of year adjustment process, as well as what was previously known as the final declaration, but is now being called submitting the tax return via MTD, which is a bit of a mouthful. Before we kick off, I will like to just run through some housekeeping. We will be taking, if you do have any questions as Leslie and I are presenting, do pop them into the Q&A within the Zoom chat box. And then we will be spending about 10-15 minutes towards the end going through questions. So if anything does spring up, please do put them into that chat. So what we'll do is, I think we're on time, so we'll kick off with some intros. I do believe the majority of those who are attending today have hopefully met myself or Leslie, but if you haven't, I'm Dorcas Whitty. I'm one of the senior product managers here at Wolters Kluwer, and I'm responsible for the Making Tax Digital product, as well as driving the strategic and tactical roadmap of how we deliver that going forward. I'll hand over to Leslie.
So I'm Leslie McQuigg, business analyst within the technology team or development team, and I lead on the requirements for MTD and interacting with the revenue on any sort of technical issues.
Brilliant, thanks Leslie. Before we dive into the actual end of year adjustments and the final declaration process, I think it would be good for us just at a high level, just touch base again around who is mandated for MTD. We're approaching the 6-month milestone in terms of 6 months left until the first tranche of MTD mandated taxpayers come into force. So that's going to land on the 6th of April, where any taxpayer that has a gross income of 50,000 and above, so that's gross of land and property, as well as any self-employment. So that's going to affect approximately 800,000 taxpayers who will fall into that first tranche. Following that, the second tranche will be those mandated that have a gross income of 30,000 and above on the 6th of April 2027, and then following that will be those that have 20,000 and above that will come into mandation on the 6th of April 2028. So we'll talk about readiness in preparation for that. I'm aware that some customers or some prospects on the call might have participated in a private beta, so you might have a handful of customers that you might be preparing or starting to prepare the end of year process for. So we'll dive straight into it. We'll get into our first poll just so that we can gauge a bit of an understanding around what your level of understanding is around the end of year adjustment process. So the poll should have popped up on your screen. So is your current understanding of the process good? Do you strongly agree, disagree, or are you fairly neutral? So we're getting some of that data come through. A good chunk, about 30%. You agree that you've got a good level understanding of the process to date, whilst 43% are quite neutral around it. And in terms of the disagree with that statement, there's about 23% of you that don't have that level of understanding around the process. So hopefully today's session will bring you up to speed at a high level, as well as a technical understanding of what happens from a software perspective in the back end of the differences between the current self-assessment process and what that will look like in the new world via MTD. So I'll hand it over to Leslie.
Hi. So I'm going to go through just a comparison between self-assessment and MTD for income tax to show you the differences. So we'll start with self-assessment. You'll all be familiar with that. We use our software of the software and prepare a tax return. And that normally, say, with the calculation, the backing schedules will be sent to the taxpayer. If you're going to file online, Then before it's sent to taxpayer, you'll generate the online filing, the XML file. Taxpayer approves it. That approval comes back, and then within our software, we send it through to HMRC. Now, it's a single submission of data. It can either be online or it can be by post, but it's effectively the same data that's been submitted. If it's online, it goes through a series of validations. So when we generate the XML file, we validate it against the schema. The schematron is cross-field validation. So if there's an entry in field 1, there should be an entry in field 2, or that kind of thing, vice versa. You can do testing live. When we do the submission, the revenue also repeat those validations at their end. They validate that the IR mark in the file is correct, hasn't been tampered with. They validate that the calculation that we've produced in our software is within a de minimis amount of the calculation that they have. If it's within that amount, even if it's not exactly the same value, the return will be accepted. If it's outside that range, then they will reject the tax return. And that's where we get into the process of doing either a paper filing for an excluded return, or if you want to do return early, you can do a paper filing. But it's a single submission of data. And you have a scenario where effectively your tax software is your source of truth. And MTD is going to change that. So if we can go on to the next slide, please, Dorcas. You'll see as we go through the slides the differences, but there is no longer a single submission. So there'll be some setup within the software. So the first thing is you have to authorize the software to interact with HMRC for MTD for income tax. That requires your ARN number. You go through a screen and we get back some tokens. You also need the taxpayers to be authorized. If they're authorized on the online services account, when you move them over to MTD, the authorization follows, or you can request that agent authorization via your agent services account, or it can be done through our software. Within the software, you're familiar with the 4 quarterly updates. That's what HMRC have been focusing on up to date. So Q1 the first 3 months, Q2 the first 6 months, Q3 first 9 months, and then Q4 will be 12 months, and they get filed through to HMRC. And so you've now got those 4 submissions. They're not tax returns, they're just submissions of the income and expenses for the business. And within our software, we currently deal with UK property and sole trade, and we're adding in foreign property in the next quarter. Next slide, please, Dorcas. The revenue of talking about pre-population of data. So this is similar to what would be available on the digital tax account with self-assessment. There are APIs, or with the income record viewer. So we can pull back employment income, so pay-as-you-earn reference, P60, pay in tax, taxable benefits in kind, there's pension, and the revenue have said that the construction industry scheme is also, construction industry scheme is also there. So that's information that we pull back from HMRC into our software. If we go on to the next slide, we then get into the thing around the other adjustments that are needed to finalise the tax affairs for the year. So the first one is to do with the businesses. So the taxpayer you have sent through the information for Q4, and then when we get into to the end of the year, there are the adjustments. So are the income and expenses that have been submitted correct? Do we need to make any changes to those? We can see they're disallowable expenses. So if any expenses are disallowable, you can do the final part through here. And there's a single endpoint for dealing with that. As part of this flow, and Dorcas will show you when she does her demonstration later on, there's also allowances and adjustments. So the adjustments will include things like transition profits, accelerated transition profits, and the different kinds of capital allowances that can be claimed. And again, these go through on a separate endpoint to the revenue. Next slide, please. We've got additional data sources. So we've put a couple there: bank interest, dividends, pension contributions. There are a lot more. Now, each of these data sources will be linked with an endpoint, but there's not a one-to-one relationship between them. So the bank interest, it includes the gross and net bank interest. Dividends, there are two endpoints, one for UK dividends, which is your cash dividends. Your scrip dividends are on a different endpoint called dividend income, which also includes foreign dividends and other things as well. So we need to enter the data into the system, and again, Docs will show that. And then at some point, we need to submit that data to HMRC. Now, because it's not a one-to-one relationship with the UI, in our process, we have a screen where you can see the differences between the data in our system and the data from HMRC system, and then submit that. With MTD, it's fundamentally different from self-assessment in that the calculation is a HMRC calculation based on data they hold in their database. And that's why we had to do all these submissions to HMRC. It gets a bit technical here, so we trigger a calculation with a particular calculation type of in year, and we can do that at any point, whether it's in the tax year afterwards, and we can get back an estimated, we get back a calculation. If it's within the tax year, then the revenue prorates the rate bands and the personal allowances, and we show a disclaimer. We're required to do that by HMRC. This is all sort of part of the preparation, so you can get back this calculation and view it and make sure you're happy. Then when we're in a position that we're ready to finalise the year, and we do something slightly different. So next slide, please, Dorcas. Okay. We then need to get a different calculation. The process in the software is the same. We basically ask for a calculation. We get back an ID, and then we retrieve the calculation for that ID. Now it's with a particular calculation type, so it's intent to finalise. And that's basically telling the revenue system that we're now in a position to finalise the year. It is not finalised at this point. So we retrieve that calculation and we can show it in the software, and there'll be a calculation ID. So next slide, please, Dorcas. We then share that calculation with the taxpayer. Taxpayers will be familiar with having a tax return, a calculation and banking schedules. There is no tax return as such, even though all the data points by and large mirror what you would have sent on a tax return. So as well as doing the calculation, we'll provide backing schedules which show how the figures on those backing schedules, say for bank interest, tie into the figure that's on the tax calculation. So we'll share that calculation with the taxpayer and they'll approve it. And that calculation ID will work in a similar way to the IR mark. So that's unique, so that uniquely identifies that calculation. So when that approval comes back and we're ready to sort of finalise the year, then behind the scenes we're changing the calculation type to final declaration. Now in terms of what you'll see or the users see, you won't see these calculation types. These are all done behind the scenes, but this shows the different things that we need to do in software to meet the requirements. When the calculation type is changed to final declaration, then the obligation for the year will be, it will change from being open to fulfilled, and then provided that there's no further adjustments, then that's the year completed. There is a process for what's called post-finalization adjustments, and that's going to be in effect your amended tax return process that you have at the moment. Okay, so I think that finishes my part of the presentation, then over to Dorcas to show how it could look.
Brilliant. Thanks, Leslie. So just before I dive in, a bit of a quick caveat on my end in terms of what you're about to see today. So before HMRC announced the delay almost 2 years ago, we had built out the end of year adjustment, or what was called back then the end of period statement, as well as 4 data sources for the final declaration. So what the team and I and Leslie are working on next quarter is refreshing a lot of that code that we've pre-built and getting it to a functional state. So what you're seeing on screen is a Figma prototype, but that's not far off in terms of what the end product will look like in the live production environment. So our goal is to start that work next quarter and then to release iteratively early next year. The plan is for us to have the final declaration released before April next year, so that you can start testing the end of year adjustments for any of the customers or clients that you have onboarded onto the pilot this year, as well as for any customers that's just interested in testing out or having a look and feel and playing around with the capability of not just the functionality, but also having a clear understanding of what that process looks like. I know Leslie's gone through it in a bit in depth and the technicalities of it, but nothing beats actually using it in practice. So there may be some changes, and we are open to feedback on this. And at the end, I will request anybody on the call who is interested in taking part in some of our prototype testing as part of our user experience and user design process. We happily welcome it. So the starting point for us will be the quarterly submission. So once you've done all of your 4 quarters and you've submitted them via CCH, you can then start doing your end of year adjustments for your businesses. So we can go into that screen and we've got our businesses here. So in this instance, it is a basic sole trade. They've only got a UK land and property and 1 self-employment business. So we can go in and we can see various different tabs, so we can make adjustments around the income and expenses that we've submitted. So you get a summary of the yearly totals as well as the HMRC totals and any differences that may be between the two. So you get that full holistic view. The difference between the end of year adjustment and the quarterly submission is that you can't go in and manually enter data into the income expenses within the quarters themselves. The only way that you can get data into the system to file to HMRC is utilising our bridging solutions or our Excel templates that we've developed and or the bookkeeping integrations that we're going to be launching next quarter, with Xero being the first release. But within the end of year adjustments, all of the yearly totals input fields are editable, so you can go in and manually key in any of your adjustments for the income and expenses. For the disallowables, you can do a similar thing in terms of the input fields. You've got a list of all of your expenses, and within the disallowable, you can manually enter any changes or adjustments that you want to make as part of that. We do give you an option for you to view your quarterly totals and the differences, just to facilitate with you making those adjustments if you do need that visibility. So we've added that functionality in. Once you've gone in and added in any of your disallowable expenses, we can then progress and add in any allowances and other adjustments to the information that we've already submitted. And again, these boxes are manually editable for you to go in this instance. There's no allowances or adjustments. Speaking to customers over the last couple of weeks and most recently, there have been questions around accruals and cash basis. Where would I go in and input that? And typically HMRC has APIs available for that, and that will be part of the setup process, or will flag whether or not that client does traditional accounting or whether accruals is applicable to them before we get to this stage. Once we've finalised or made all of our adjustments as part of our end of year, we can go in and we can review the information. So we give you a brief summary of all of the changes that I've made. If you are an existing CCH customer and you use document management, our MTD solution is fully cloud-based, but we are giving you the mechanism to automatically save those documents back into the document management product that we have within CCH, just to make the process as seamless and the integrations as slick as possible, so you're not having to download and upload from two separate systems. You will also have the capabilities to download this as a PDF to potentially share to your clients, just for visibility. But once we're happy with that, we can mark our end of year adjustments as complete. And then we can send all of the updated data to HMRC. And then you come back to the dashboard view and you get an audit trail as well as a change of status to let you know that you've submitted your adjustments and also a date and time stamp, so you've got that visibility of when that action was complete. So once we've done that, we can go into our additional data. So we've captured any missing receipts or invoices that wasn't submitted as part of our quarterly submissions and any additional adjustments that we've made. Now we can add in some additional data such as gift aid, as an example, UK bank interest, and we've got a list here of all of the additional income sources. So where the quarterly submissions is equivalent to you preparing and submitting just the SA 105, SA 106 and SA 103, the final declaration, or as it's known now as submitting the tax return, is similar to your self-assessment in regards to all of those other income sources. So HMRC has a roadmap of all of the APIs that they will be building and all of the income sources. So one thing you might have noticed is that this isn't a complete list of all of the income sources that exist today for self-assessment. As an example, partner income is missing, and that's a great example, as HMRC hasn't developed those APIs yet, and therefore doesn't support that as part of the MTD process. So as and when we as a software provider get visibility and access to those APIs that HMRC deliver, we'll build those and support them within our system as well. So we can go in, and for this example, we'll add in UK bank interest, dividends and charitable giving. And with these data sources, it comes back to what Leslie mentioned around the pre-population of data. So we make a few calls to HMRC systems, and where HMRC has data, we will surface them within our application. So I'll give you a view of what that would look like for bank interest. So in terms of look and feel of the form itself, it's very similar to the existing structure of the self-assessment forms today. You have the ability to add in your bank name, your account number and sort code, and then add in your interest received. So those are all manually editable data fields. But then if HMRC does have any data and we pull that through, we will surface that here and flag it as HMRC data that is held. So you have a clear view of what HMRC has versus what you've received from your client. Excuse me. So we can add in multiple entries in terms of the bank interest, and then we can mark that as complete. We can go back to our dashboard. We can see we've completed the form for UK interest. We can now move on to dividends, and similar again, we can go in for the dividends from UK companies, add in our company name, company description, date disposed, date paid, the quantity, the distribution type, as well as the dividends received. You get your actual amount where you've done manual entry, and again, where HMRC holds that data, we'll surface that within our system so it's clearly visible, and that would apply again for the dividends from UK unit trust, where you can go in and enter the units held and the dividends received and disposed. If we're happy with our data entry, again, we can go in and mark that as complete as part of our tax return. And then we can go into the final form for this client and add in our gift aids, so our charity names, the net amount, the one-off payments, etc. And again, similar to the other forms, these are all manual entry forms, so you can go in and input that data. And once again, where HMRC holds that information, we'll extract it and surface it within our application. So again, we can go in and mark that as complete. And now we've got a complete view of all of our data entries that we've completed for all of the additional income sources that is held by our client. Once we're happy with that, we can start to go into the finalised tax year. And here you get a summarised report of your data entry and the actual amounts that you've inputted versus the amounts that is held by HMRC, and then we'll showcase any differences between those figures. To Leslie's point earlier, we can now go in and submit this data to HMRC, and then we make a few calls in regards to the intent for us to finalise, and then we will retrieve the HMRC calculation back. So we get the submitted to HMRC status, the date and timestamp, and then once we're ready, we can retrieve the calculation from HMRC. So in the back end, we will change the calculation type to intent to finalise as part of this process. But it's at this stage where you get the visibility around what the full view of the tax liabilities are based off those HMRC calculations. And then we give you the ability for you to download this as a PDF that you can then share with your client to get client approval. We will be adding additional functionality for us to incorporate e-sign capabilities within the software, so you're not having to leave our systems in order to get that client approval. We'll be able to do it if you've got the client's email address as part of the client records seamlessly within our application. So once we've sent that to the client for approval and they've sent back, we can then go in and finalise the tax year. And this is where we get the declaration from HMRC, just to confirm that what we are submitting is one approved by the client, and all of the details in there are correct, and just declarations around penalty. So this is standard terminology that HMRC has flagged that needs to be included within the software for agents, and then we can mark that as approved by the client, and then we can then submit that. So if we go into our submission log, we go back into home. Might need to do that again, bear with me. Okay, there we go. We can now see the submission log and audit trail. So we do get the calculation ID back, and we also surface the calculation ID within the report that gets sent off, that you can send off to your client. So this is essentially an equivalent to your IR mark, so you know what version has been submitted. You also get an indication of who the submission was made by, the submission status, if it's pending, if it's been approved by HMRC, as well as any tax due or overpaid status that we get back. We will also surface that to you. So within the submission log in our system, we do break this down and separate it from the quarterly submission, so you get a full view of all of the quarters that you've submitted, and then a final view of your the tax return that you have submitted. And you could always go in and refresh the status so that you can get an updated view of whether or not it has been approved by HMRC. So in all, that's a whistle-stop tour around what's the end of year process and submitting the tax return via MTD will look like within CCH IFAM. We will now open up to questions. So hopefully you've been entering those into the chat.
Yeah, there are lots of questions in the chat. Okay, on the first one, the question is if the client has self-employment income at £60,000 for 24-25, would they be expected to register MTD? The answer is yes. Even if their income is expected to drop, they would be expected to be an MTD from April 6, and their income of 25k would mean that if it didn't drop any further, they would remain in MTD. You'd have to have 3 years of income below 20,000 before they can exit MTD. And by that stage, MTD will almost certainly just mean the quarterly submissions. They would still likely remain on this system for doing the end of year tax filing. The next question is using digital links. If you're using a spreadsheet, then I'd expect the information in this spreadsheet to reflect accruals and repayments, so only include the income and expenses that relate to the period. If it's on a cash basis, then the income and expenses as they're incurred. Bookkeeping, I'd expect similar in the bookkeeping, and if the bookkeeping is on an accruals basis, then what information we would extract from that would be what was earned in the relevant period. The next question about the information, whether it's going to be pulled from HMRC, it depends. So if we are linking, so if we're bridging information in from a spreadsheet, or we're linking to bookkeeping software, then that can so we're going to be doing or working on now, be released at the end of this quarter, beginning of next quarter, that the quarterly submissions will be done in our software. If they're not done in our software, then we'll be adding functionality next quarter where we can bring back the summary information. So for self-employment, it would be the turnover of the business income and then the expenses for that quarter, so that when we get to the end of year process, we would have that summary information. If the quarter submission be done in the bookkeeping, we wouldn't at that stage have any of the transactional details, but we would have the information that's been submitted to the revenue, and then the adjustments around the income, we could make those in our software, so that CCH would be your ideal tool for doing the end of year submission. The next one says about a limited company. I'd say I focused on the numbers. That's my background, not the words. An honest attendee is correct. It shouldn't have said limited. I think somebody else mentioned Acme Limited. These will be sole trades only. As everyone should be aware, for corporation tax, it won't be going into MTD at all. But we're looking at a different solution for corporation tax. Any demos that we do, you'll see it come back as Company X, and that's just because in the sandbox environment, when we're doing demos, and we retrieve whatever the revenue give us. I think we've already dealt with this one for Charlotte. So if it's the submissions on another piece of software, we can retrieve the totals and show them in our software. Capital allowances, initially we'll start with just being able to fill in the box. We are looking at a capital allowance engine for IFAM for both personal tax and MTD, but that will come in the future. So again, we'll have the functionality in the future. It won't be there from day one on capital allowances. Depreciation, I don't think it's allowable for tax purposes. It's been a while since I was in practice. But for the accruals and prepayments, as I mentioned before, for the quarterly submissions, you would need to ensure that the information that you're bringing in is, if it's on an accruals basis for the relevant period, if it's on a cash basis, the income and expenses incurred in the tax year. The next one, the approval process. So up until now, we've talked about the final declaration, and developers have been, or largely been, the same because of the information we've had from HMRC. They've referred to it as final declaration. I know on their taxpayer facing website, they've referred to it as tax return. So that final stage that Dorcas showed you, where we get the declaration, you tick the checkbox and you do submit the revenue according, submit your tax return. But that is the end of the process. The approval process, at a minimum, is you have to share the tax calculation. So that's HMRC tax calculation on data they hold, and we get that in the software. You share that with the taxpayer and the calculation ID. They approve that, and then when we submit it, it basically changes the calculation type in the back end to final declaration, and the revenue will change the obligation status from open to fulfilled. Yep, Acme Limited is misleading. That's our fault. We'll get that corrected in the Figma file. So initially, you'll need to enter them and do the calculation outside the software, but at some point, we'll have a capital allowances engine for capital allowances. Okay. If you've got partnership income, then as Dorcas says, the API is not available, so they cannot join the pilot. HMRC will make the API available in April next year. So if they're mandated based on their income from sole trade, UK property, foreign property, and other partnership income, they'll be in from April next year. Have revenue developed APIs, foreign investment income? Yes, there are APIs, obviously, for foreign property, for foreign interest income, for foreign dividend income. And there is I think if you're familiar with the SA 106, and I can't remember what page it is, 1, 2, 3. Might be page 6, where you've got the double taxed income for things like employment income, self-employment and partnership. There are APIs to be able to submit that. I haven't looked at any details, so my assumption is that the revenue would calculate the foreign tax credit due based on the double taxed income. But there are APIs there to submit the foreign income. So for foreign interest, it would include the foreign tax paid, and where you've got things like employment or sole trade, there'll be the ability to enter the double taxed income and the foreign tax paid, and whether you're claiming a credit or not.
Yeah, just to add to that, what I will do is we'll add in HMRC's list of APIs and what's available and what's on the roadmap to come within the deck. So you've got full visibility of what's available now from an API standpoint and what HMRC supports versus what they'll support come April next year.
On the accounting adjustments, yeah, in the prototype we showed, we did the submission. The stance from professional bodies is that you do not require the taxpayer to approve the submission of data. You only require at the end of the year to basically agree the year. So similar to what we'd have in self-assessment. I'm aware that some firms have a different approach and they would want the taxpayer to agree the submission. On the quarterly submissions, which we didn't show today, previously which had the submit HMRC, we will be developing like a report or something that can be shared with the client before the data is submitted. And that's something that we can do prior to submission of things like the end of year adjustments for the businesses or the other income that's needed to finalise the year.
And just to add to that point in regards to the functionality we'll be adding in there, given the time period is so short in terms of getting that approval before you submit. Leslie mentioned the first quarter is 3 months, but realistically it's 2 months before the quarter closes and you need to make that submission. So we will be adding some automations as part of that e-signing approval process to make sure that you are hitting those deadlines for submission without incurring any penalties. Again, the review and e-sign functionality will be optional. We're not going to push users down that route. Depending on your firm's policies, if you want to implement it, we'll give you that option to implement the e-sign.
Okay, additional source of income. Um, they don't do it at the moment because I've only got one tax year in MTD for income tax. But as we add additional years, then we will be able to roll forward. The exception will be the business income, so sole trade, UK property and foreign property. We have to retrieve that from HMRC. It's not something that we can set up in our system. So for everything apart from those three, yeah, we'd have functionality going forward to be able to roll forward the static data as we do in personal tax. I'm not sure if beneficiaries for a trust are within MTD. I mean, if they are, then we can look at functionality to bring in the beneficiary information from the R185 into MTD for income tax.
But that's something we can take away, and we can get back to you, Graham. And maybe that might be beneficial for everybody else, or we might just add it into our FAQ for visibility's sake.
Bank accounts entered. Yeah, we could do that. I think we've had a request on personal tax to be able to do that to hide certain things. That's something we can add on to the roadmap. Joint income to be split manually in the first instance, yes. And then later on, we would add the ability to, as in personal tax, to enable joint income and split it between the taxpayer and the other party. If we pull back data from HMRC, then by and large, we would be able to amend it. The one thing I'm not entirely sure about is the employment income. So there's two types. We've got, say, employments, and there are custom employments. With the employments, I would need to double check whether we can do, as I think for those, we can just pull the information into our system. I'm not sure how we would deal with discrepancies there, so that's something we can take away. But for other sources, yes, if say the bank interest, if I backtrack a minute, for most of the information we get from the revenue, if we're pulling it back, we get summary information. So for dividends, we'd get the total dividends. We wouldn't get any breakdown. For bank interest, it's slightly different. We get the bank account names and the bank interest per each account. If there are any changes, then they'll be added into our system, and then we could submit those changes back to HMRC. Will there be a review option as there is? Okay, sorry, Dorcas, you put a message there?
Yeah, just some feedback around if we could read the question as well, just to provide some context.
Okay, sorry. The next question from Sarah is, will there be a review option as there is currently? I'm not sure I understand the question. So currently we have in CSH personal tax or tax return bundle, which we can share with the taxpayer. Or is this more about within personal tax? We've got two checkboxes. One, well, basically we say it's complete. I think one we say it's reviewed, and then that locks the screen. I know on CCH-personal tax, we've had that functionality in, and we'll be doing the same on MTD, that there'll be the ability to lock the screens when it's been reviewed. Okay, the question is, if you have a client now that needs to submit quarterly returns for MTD, do you have to use the CCH firm to submit the final or to finalise the year? There's not a final self-assessment return, or can you use old existing methods? MTD and self-assessment, like self-assessment, are very different. The self-assessment is built on something called CSA. I think it's Computer Environment Self-Assessment. MTD is built on a new platform called ETMP, Enterprise Tax Management Platform. You're either in MTD or you're in self-assessment. So if you're in MTD and doing quarterly submissions, you would need to use MTD software to finalise the tax year. The only time that wouldn't be applicable for any reason the taxpayer had an income source or expenses which the MTD environment can't deal with, and then the revenue would allow them to move back into self-assessment to do a legacy style self-assessment return. But in general, once you're in MTD, you remain in MTD. The next question from Colin is about a capital allowance calculator. So initially we won't have that, but in the future it'll be added into the roadmap. The next question is, what entries in the first quarter be rolled forward to the following quarters? it depends how you store the data. I think something that dogs may come on to later, but if you are using a spreadsheet and you've got digital records, then when you look at Q2, the information that we need to submit is the information for the first quarter and the second quarter, so it's 6 months. So I'd expect when you're populating the summary tab that you include all of them. So it's not a roll forward, just that when you summarize the information, you're summarizing it across those 2 quarters. When we integrate with the bookkeeping solution for the first quarter, so if it's on a tax year, we'd retrieve from 6th of April to 5th of July. And then from the second quarter, it would be August, September, or 5th of October. So from the 6th of April to the 5th of October. So we would include it, but it's not a case of rolling forward the information. We would just basically say, here's a transaction, here's a summary of the transactions for this quarter, and we'll submit those.
Yeah, and just to add to Leslie's point in regards to roll forward, we have implemented cumulative quarterly updates. So as and when, for example, in Q2, you have updated data that you didn't necessarily submit in Q1, you can make those submissions in future quarters that way.
From anonymous attendee, it says, should the display heading be unit trust rather than UK trust? Yes, again, so my focus is very much on the numbers. I should have looked closer at the wording. Okay, the question is, where we've previously prepared a tax return in CCH, will the source of income pull through? Will we have to add them again into iFirm for MTD? For people in the pilot, they would have to be added in again. I know that for CCH iFirm personal tax, when we roll forward from 1 year in Central to the cloud, that we're taking up the static sources, and we can do that, but that won't be available for the pilot. That will be available in mandation, so from April onwards next year.
Yeah, so that will be we'll be adding that functionality as part of our compliance release in Q1.
So that deals with those 2 questions. The next one was the same. The question is, for dividends, do you need to enter each dividend? Some clients have hundreds of dividends. I mean, that's up to you. It's however you deal it now. As long as you're comfortable that the information going into the software is correct, complete and correct, then you can enter them individually, or you can enter in the total. It's fine. The next question, can we link to the FTSE 350 feed to pull in be the dividend information? It's not, we haven't developed the screen yet for MTD, but it's something that we can include. I believe it's been done for CCH iFirm personal tax.
Yeah, that's correct, Leslie. So once we build it into our personal tax tool, we'll be able to quickly replicate it in MTD. We as a business are also investigating how we can expand that. We know that customers have fed back that the FTSE 350 feed is great, but it is limited. It doesn't have additional scope for things like the S&P 500, etc. So we are investigating other feeds that we can add in so that we can broaden the scope. But that's in discovery at the moment.
Okay, the next question is about, I may have missed this, but how do you report capital gains? We didn't show capital gains. We only showed a couple of data entry screens. For capital gains, there are some APIs available, and there'll be more coming, so we'll include them in the future. But in the same way that we would have gone in and entered the bank interest or the dividends, there'll be a data entry screen for capital gains. Next question is how we'll be able to attach documents. At the moment, I don't believe there is any ability to attach documents. And for the pilot, there's actually no ability to do white space notes. The Revenue almost proudly announced that in the MTD Readiness Forum. So for anybody in the pilot that's got white space notes, they have to be sent in on paper. I did query with HMRC how they're going to reconcile that letter with their digital records. They didn't answer that, but that's something. The white space notes will be available from April next year. And next one, why does tax calculation not show the rental and self-employment income? Okay, this is a Figma design. So what we did was we gave the designer a calculation, and we've missed off the rental income and the self-employment. So this was very much to show you how the process would work. It's not working software. The question here from Zoe is that you submitted the end of your business adjustments HMRC before writing in the final information. Would you not get client approval of that before submission? That's really down to you as a customer, whether you require the client to approve the data before it's submitted or not. And we'll have that functionality in so that you will be able to share the information to the client before you submit it. So that one's answered. Okay, so Colin's asked that, or the question is that HMRC have said that clients claiming marriage allowance and blind person's allowance cannot file the return as they're not an API. If there's not an API for a particular income source or allowance, does that mean that those clients, if they also have 50,000K of income, would not be required to join MTD? The answer would be yes. For HMRC to expect people to join MTD for income tax, they need to make all the APIs available. So we mentioned the partner income, that people who've got partner income can't join they can't join the pilot, but they'd be expected to join from April next year. If there are APIs that are not available, so things like non-residents, then taxpayers will not be able to join MTD until those APIs are available. Okay, Benny, so it seems that we need to submit to HMRC before the client has even approved the submission. Is it not possible for CCH to create a tax comp in advance so it can be approved by the client before we submit anything? So yes, and there's a caveat. The revenue is sharing a calculation or logic for a calculation with us, and that's in something called pseudocode, which is sort of, it's like it being in English, and we can take that and develop it in our software. Now that calculation's not yet complete, and we'll be able to have that, and then based on data that we hold, produce a calculation. You could share that with the taxpayer, but that can't be used as part of the approval. Well, say it shouldn't be used as part of the approval process. What you need is to share the calculation with the calculation ID at the what Stalker showed at the end. So you could do that, and you could say share with the taxpayer a calculation that we've got or that we've produced based on data we hold in the backing schedules, and say this is a draft. But when you come to finalize the year, you need to share the actual tax calculation that the revenue have produced on their data, as that's what the taxpayer needs to approve. So in the same way that for self-assessment you've got an IR marked return, for MTD you'll need to share the calculation with the calculation ID.
So once that calculation's complete, we do have it in our roadmap to showcase that to you. We know it's important to our customer base, but we're at the mercy of HMRC until that is complete.
And the next one, self-employment's not companies. Yep, we've answered that one. That was a typo in our design.
Brilliant. We've got time for one more question before closing statements.
And then from Collins says feedback, there should be an option to download the final calculation and schedules to DM. Yeah, we had that in our Figma design for the end of year adjustments, but we didn't have that on the final calculation.
Yeah, but it is functionality that we will be adding in as part of that as well. So thanks for the feedback, Colin. So what I'll do is I'll just wrap up really quickly. We've got hundreds of questions still left for us to answer. So me and Leslie will take that away and we'll start answering those, and then we feedback. Hopefully we've got all of your emails on file, and Steph will send out an update with all of the answers to those questions. So if I go back into the slide, and we'll just launch our final poll in terms of whether or not this webinar has been useful. Has it improved your understanding of the end of year and final declaration process? We're getting some answers coming through. some great feedback. 80% of you guys have said yes, this has helped improve. And then we've got almost 20% of you that are saying you need further clarification, which is great. I don't think one webinar is going to help with the full scope. This is a huge change in terms of your current process of doing things. So this is a really nice segue for me to kind of sell you, for lack of a better term, some of the upcoming webinars where myself and Leslie will be going into further details around some of the points around the end of year adjustments, final declaration, and also the quarterly submissions based off of the remaining questions we have here. So definitely scan the QR code and sign up to that final episode for us to give you and share some more insights on that. And equally, if you want to meet us in person, we are hosting our user conference on the 1st of October. So do register your interest. Myself and Leslie will be present, and then we'll also have a dedicated MTD breakout session where we can answer more of your questions and hopefully provide some additional clarity as we count down to mandation. So definitely do register your attendance. The CCH Connections isn't just an MTD focused event. We will also be showcasing our wider CCH iFirm offerings, including our cloud document management system, time and fees, as well as other partners and software providers that will be there on the day to showcase their offerings as well. So really looking forward to that session. And then lastly, if you aren't on the MTD pilot program already, I highly encourage for you to join, even if it is just finding one client to participate so that you've got a clear understanding around what the quarterly MTD process will look like. And then also having early access once we have released the final declaration, end of year adjustment functionality, having a play around with that, as well as some of the exciting releases that is coming on the horizon, such as the bookkeeping integrations for MTD. So do sign up. We have had a great uptake on the pilot from existing CCH customers. We're nearing triple digits in terms of customers that have signed up, and also the customers that are awaiting activation. And then we've also had in the last quarter double-digit successful submissions for the quarterly submissions for UK property and also self-employment. It's also a great way for you to engage with us, myself and Leslie, as we're always looking for feedback around how we can make product improvements to our MTD offering ahead of mandation. So do scan the QR code to sign up for the pilot, and or if you are an existing customer, reach out to your account managers and they'll be able to provide you with additional details around how you can get set up and we can activate iFirm for you. With that, I'd like to say thank you for joining us, and I'm glad the majority of you have found this helpful, and let's keep an open dialogue for those that need further clarification. Our doors are always opened, either via email, LinkedIn, or when you see us in person. So thanks again for attending.
Thanks all. Bye-bye.
Bye.